See
There we
the
go. So we might be able to make something of this. So thank you for everyone who
okay.
worked out with us and stayed in. Appreciate it. I don't want to waste any more of your time. Ryan, I'm going to hand it off to you.
All right, yeah, thanks, Lewis, and yeah, I definitely apologize again for the technical difficulties there. I got in here a few minutes early, and anyway, something always comes up, but no, definitely appreciate everybody taking your time today to learn a little bit about EquiTrust and the new partnership that we have here. This is a great time for you guys to come on board with us because we've got a lot of exciting changes that just recently happened that I want to share a little bit with you. So I'll start out with just sharing a couple updates that we've had on our core product portfolio. And then Lewis and I met a couple weeks ago and identified a couple of products that we think could be a really good fit for you guys to really excel with and get going here, which is our Bridge long-term care annuity and our Wealth Max bonus life, which is a single premium index life product that could be really good fit for you all as well. So just getting into the presentation here, I'll stop a couple times along the way for any quick questions. I'll try to keep it to about 30 minutes here to be respectful of your time. So, like I said, just getting started with the updates to our core portfolio. EquiTrust is an annuity carrier. We do fixed index annuities primarily. Our portfolio is about $27 billion in assets. We're currently B++ rated with AM's Best, and we have A- rating with Fitch and S&P. So very strong financials, backing for you and your clients' future here. See if I can move this out of the way. So with our core portfolio, we've just done a little bit of a refresh and really tried to focus in on some of the needs of your clients to really be the best in some of our core focuses here. So we have a few different categories that we've made for our fixed index products. One is accumulation focus with a bonus. We also have accumulation focus with no bonuses. You're going to get higher caps and participation rates on those. And then we've also got some income focused fixed index annuities here as well. So I'll just show you the names of these real quick and just a couple quick highlights. Market Edge Bonus is our brand new bonus product for accumulation. It's going to have a 20% bonus that's credited over 3 years. So really giving your clients a boost out of the gate there. We've got our Market Power Bonus, which is a 12% premium bonus that's credited up front. And then our Market 10 bonus, which is an 8% premium bonus. We've also got our accumulation focused products. You've got Market Value, Market 7, and Market 5, which are going to have a little bit healthier caps, participation rates for the long term there. And then we've also got our income focused products with Market Early and Market Future. As the names imply here, Market Early is going to be very strong for your client's income in the first 5 years they own the policy, whereas Market Future is going to give you a little bit stronger when they're years 6 to 10 looking for income. So we've got a wide approval on this. So encourage you to go out to the website and get illustration for any of these products, or if you have questions, you can always call our sales desk as well. I'll get the number on the screen here in a little bit too, but it's 866-598-3694 is the phone number there. So again, that just kind of a tease on our core portfolio there. But Lewis and I had met a couple weeks ago and identified a couple products that we think would be really great to supplement your business and can really get you off to a good start with EquiTrust. So the first one is our Bridge fixed index annuity that is designed for long-term care. And go into that just a little bit here. But first wanted to just talk about why the need for this product. So on the screen, you can see about 90% of traditional insurers or traditional long-term care insurers have decreased their coverage options or completely exited the space over the last decade or so. 70% of people turning 65 will need some sort of long-term care services in the future. And a majority of them are having family members who are caregivers that end up using their personal funds. And then also that, majority of them, close to 90%, do want to be able to age in place. So, there's some challenges that we're seeing there that this product is really designed to help meet the need for. So, give you a couple other numbers quick on the cost of the long-term care that we're seeing these days. Just these numbers, looking at long-term care really start to become a problem for people, if they haven't planned appropriately for it. So Bridge has really been designed to help meet that need. So why Bridge? So there's a few things that really make this product unique. Number one, it's on a fixed index annuity chassis. And so it gives you the ability to have that long-term care coverage and get some accumulation without being a use it or lose it situation. So if they passed away without using the benefits from this, they can still pass along the accumulation value to their heirs. It's also flexible premium, so they can add to this over time. You would purchase additional coverage. Simplified underwriting. This is a very unique process for the underwriting. We have 5 underwriting questions, and then there's a 30-minute video call that they would do with the underwriter. And with about 15 minutes of finishing the call, you'll get your decision as far as the underwriting class, whether they get preferred, standard, or secure. So I'll show you a little bit more on that here in just a moment. There's also a proprietary wellness program that comes with this. So really designed to help increase aging or better aging outcomes with the program that also allows them to get additional credit towards their long-term care and grow their long-term care benefit base for the future use. It's also an indemnity-based claim process, so they don't have to collect receipts and submit those. They just have a certification that's signed by a doctor when they are having trouble with the 2 of 6 ADLs or cognitive impairment. And then the long-term care benefit is also customizable that helps you minimize the fees on it as well. So quick look at the specs on this product. You can issue it from ages 55 to 80. It's a minimum of $50,000, and it's currently non-qualified money only. Like I said, flexible premium. It's a 10-year surrender charge chassis. They can get 10% penalty-free withdrawals after year 1. And then the accumulation value potential with the fixed account, which I'll show you the rates here in just a moment, as well as the index options on that. And then they have some flexibility with being able to choose their benefit base to be able to minimize fees here. So that's a little bit again on the underwriting process. So again, this is a very simple process that you'll see. If we have time here at the end, I can show you the website that has the underwriting questions. It's 5 knockout questions. If they answer no to all of them, and they're very simple, straightforward, then everything's on the table, and they'll want to go through the preferred class or the underwriting call to see if they get the preferred, standard, or secure classes. The biggest thing is that there's no prescription checks. There's no MIB hit with this. No blood draws or anything like that. So it's just very simple, straightforward for anybody that doesn't want to go through those processes. there are a couple, just to note, there's a video here, I won't play it, but there are a couple videos on our microsite for this that help kind of walk you through to be prepared for the underwriting session. There's one for both agents and clients, so you can kind of get a peek behind the curtain as to what that would look like. So once you have the policy in place, the long-term care rider works a little bit like income rider on a traditional fixed index annuity, if you're familiar with that. So they can choose their benefit base. The maximum coverage for the first year is up to $1 million. That would be for long-term care coverage. And once that benefit base is set, it will roll up at 2% for up to 20 years. So I'll show you the coverage ratios here in just a moment, but it's a great way to get that started and have that grow until they make their claim. And then once they do trigger it, with the doctor's letter, we do pay out that full benefit base over 60 months for long-term care, which is then a tax-free benefit. So this is just a quick look at the coverage ratios for the bridge. You can see that it's a tripler if they get the preferred class. Things to note here is that we are seeing a very high percentage of people that are going through the process that end up in preferred. It's about 70% that are getting preferred. We're seeing about 10% in standard and then 20% secure. We're seeing a little bit higher percentage on the secure because this is a guaranteed approval for the underwriting. Nobody gets declined in the underwriting process. So it's not guaranteed issue because there is still suitability with it being an annuity product, but it's a way to start the conversation with your clients saying that you have a long-term care product that nobody gets declined in underwriting. Everybody is guaranteed some kind of coverage. So just a quick look at the rates on this also. One thing about Bridge is that we did want to give it, since it's a fixed index annuity chassis, give it some teeth to really get some accumulation on it. Obviously, people want to make sure that their future is secure with the long-term care coverage, but then if they don't use it, that accumulation value is still important to be able to pass on to their heirs. So really giving people a good opportunity to make some money on accumulation value to be able to leave as a legacy here. So just a couple quick ideas on where we're seeing sales from this. 1035 exchanges from other annuities or life insurance that's no longer needed are a great opportunity. Anybody that's got substantial funds in money market, checking, savings, or CDs. Clients, like I mentioned, clients that were previously uninsurable for traditional long-term care, since it is the guaranteed approval and underwriting. And then it's an alternative to traditional long-term care policies. So, lots of opportunities here to look at things during your client's annual reviews and find some ways to really help them with this bridge product here. So there is a dedicated microsite for Bridge. So it has all the marketing materials. You can find illustrations, there's a calculator, and then this is where you would also build in your clients and schedule the underwriting. And it does have the licensing requirements out here as well. So the website for this, agents.equitrust.com/bridge. You can get to most of the information without even being contracted. All the marketing material and everything is available, so you can really do your due diligence even before you're appointed here. So I'll pause real quick after talking about Bridge. Was there any questions on that, or presentation coming through okay here still, Liz?
Really quick, Ryan, before you move on to the other product. Just want to reiterate, it's not guaranteed issue, but everyone
Mhm.
gets coverage. It's
Correct.
not guaranteed issue because of the suitability issue, but everyone does get coverage. Am I correct on that?
Yeah, absolutely. Yeah. So, it's definitely accurate to say you have a product where everybody would get some type of coverage. Nobody gets declined in underwriting. Worst case scenario is if they answer yes to one of the first three knockout questions, it automatically puts them in the secure class. But then again, they do still get some coverage and some leverage in that scenario.
Anyone else have questions that they want to chime in before we move on? Hold on, there's someone in here. Can New York cross border for sales since it's not approved in New York?
Unfortunately, no. New York is one of those tricky states that we don't do any business there. Unfortunately, I guess the only exception is if they do have another residence in another state where they have a driver's license, vote, or file taxes. Those types of situations could work for New York, but generally, New York's not a state that we have any of our products in.
So you mentioned the long-term care up to 5 years. What is that? Is that just the tax-free, or how long is that coverage?
So that's how long, once they file a claim, that's how long their payments would go for. So the typical long-term care claim is about 3 years, and so we've designed the benefit to go for 5 years because so there'll be on averages there'll be people that need it for longer, but the 5 year is the kind of across the board what we pay that benefit base out once they trigger their claim.
So
Typically,
5 years, up to 5 years per claim. Can they claim again after the 5 years if they need it, or it's just a one-time 5 years?
No, so they wouldn't be able to make multiple claims, but they can turn off the payments if they want to, because they do have to recertify every year. So you could start and stop, but your payments would just pick off wherever they left off if you turn it back on again. Unless you take an excess withdrawal, then the payments would be recalculated.
Okay, thank you.
Mm-hmm. So I'm going to go ahead and move to the Wealth Max here in the interest of time and just keep things moving here. So I'll pause for questions again at the end of this one. But starting off here, just why the need for Wealth Max? So there's tens of thousands of baby boomers that have retired over the last decade, and we're coming up on next phase of life where $84 trillion is estimated to exchange hands, be passed down over the next 20 years. So WealthMax is a great tool to be able to help people do that. So go right into the specs on this. It's a life product with a 10-year surrender charge period. It's just a $10,000 minimum here. And this also has a maximum $1 million face amount in the first year. So important to make sure to look at the illustration. If somebody is going to be bumping up against that, we can run it backwards to find out the maximum for them. This is a single premium product. Issue ages to 45 to 80. There's a 12% premium bonus. And then a couple of the most popular features of this is a return of premium rider. And then there's the accelerated death benefit rider, which I'll touch on here momentarily. So another huge benefit to this product is that it's a fully digital process as well. So this is a proprietary underwriting process. There's no video call. You'll actually get your underwriting decision within about a minute of submitting it. So biggest thing to remember when you actually start doing an application is that it's a two-step signature process for your client. So the first portion, you'll fill out some basic information for them. There's about 20 health questions that you'll answer. You'll send it to your client to sign off on that, and then also get them to sign a HIPAA disclosure so we can pull the underwriting. Third step is to request the underwriting. Again, you'll get your decision within seconds of clicking the button there. And then again, very high approval rate that we're seeing on this. We just relaunched this product last fall. We've seen several hundred policies come through, and we're about 90% approval rate on this. So very simple. But once you get that decision, you will fill out the rest of the application and then send it back to your client to sign one final time and get submitted. But since that underwriting process is so quick, you can do that all in one session. So again, with the underwriting on this, it's very non-intrusive. So there's no phone interview with this one, unlike Bridge, but common things, there's no medical exam, there's no MIV hit. So even if it comes back as a decline, it does not get reported that they were declined for insurance elsewhere. So state approvals on this, we do have some version of this approved in every state except New York. California is a big one that we get a lot of questions on. This doesn't have the confinement for nursing care approved there, but generally approved in most states here. So touching on a couple of those features quick, the return of premium rider. So basically at any time, if the client decides they just want to pull the cord on this and get their money back, they can. So there's a commission chargeback in the first couple of years on this, but it just gives people the peace of mind that if they ever needed to get the money back from this, they can. So they are guaranteed to get the higher of their surrender value. So if they've had some good index performance over a year or two, they could get it back higher. But worst case scenario, if they put in $100,000, a year and a half later, they decide they need that back, they'll get every penny of that returned to them. So another big feature in this, and we do highlight these in our illustrations too, and I'll show you a little bit example of that in a moment, but the accelerated death benefits, so the guarantees that come with this policy are extremely strong. You can see here you can trigger for terminal illness, nursing care, confinement, or chronic care benefit. So if they can take it over a certain number of months, or they can accelerate it in a lump sum, and you can kind of see the breakdown here. Our agent guide also breaks this down really well. But again, just another peace of mind for your client that if they need to access this, 15, 20 years down the road for some sort of unforeseen circumstance, they could still do that. And on those same lines here, a couple of the liquidity options. They can take penalty-free withdrawals starting in year 2. They can take up to 5%, and then there is a loan option here too. So with being a wealth transfer vehicle, it's not necessarily designed for that, but just another peace of mind for somebody that may have those needs in the future. So the account options on this, the timing of our relaunch of this product was not coincidence. The rate environment for this type of product is definitely here, but we also did want to give people the option to be able to increase their cash value and their future death benefit by giving us some pretty healthy rates as well. So this is the hypothetical example for a client. The next couple slides are actually going to show a couple pieces from the illustration. But we've got Carol here. She's 65, non-smoker, had $100,000 in a CD, earning 4%, and we want to show her what it would look like if she put that money into WealthMax. So you put in your $100,000, and these are the kind of accelerated death benefit options, and then her guaranteed death benefit. So right out of the gate, she passed away in a couple of months. Her guaranteed death benefit is $180,000 for her beneficiaries. But then this is early on in the policy, but she could get almost $5,000 a month for nursing care, $3,000 a month for chronic illness, or a lump sum for a terminal illness diagnosis. So the illustrations have a supplement where you can show the life expectancy benefits as well. So Carol's life expectancy is age 89, which means by that age, she have a cash value surrender of almost $290,000, and then the nursing care benefit almost $9,000 a month here, and then the death benefit would be almost $330,000. So again, these are very, very powerful pages in the illustration. They look almost exactly like this when you run one of those quotes. So the product position of this, number one is that it's a wealth transfer vehicle. You get that 12% premium bonus up front, but really, doing some of that legacy planning for your clients. That higher guarantees, so those pages I was just showing you that are in the illustration, showing what those benefits are for those what if type situations, or even the return of premium. And then also the simple underwriting. So anybody that doesn't want to mess with APSs or any of those potential hits on NIVs, this is a great option to be able to do something that's quick, easy, and painless for them. Funding opportunities on this one. So the dusty money is a big thing that we've seen a lot of money coming over from CDs. People just basically writing a personal check for this. Life insurance policies that require ongoing premium payments or underperforming life policies. We have seen a fair amount of 1035s coming over on this. But then also another opportunity too could be the non-qualified annuities, where they do a non-qualified transfer. So that scenario could be a taxable event. So you'd want to see what kind of gain they had there. But if somebody has underperforming annuity and maybe they don't necessarily need that money for retirement, they want to leave it to someone, WealthMax is a great opportunity for that as well. So sales opportunities is kind of touching on it again for the what if scenario. So this is our Swiss Army knife. So the tax-free death benefit for the wealth transfer is a huge opportunity. Those accelerated death benefit riders. Didn't touch on it much, but there is a longevity benefit. If somebody withholds it or holds the policy for 15 years and they reach age 85, they can access the death benefit for themselves as a longevity bonus. It's the index whole life insurance chassis, so it gives them that accumulation value potential. And then you've got your return of premium rider feature and the simple underwriting process as well. Just like with Bridge, we've got microsites designed specifically for this. So agents.equitrust.com/wealthmax-bonus-life. If you just go to agents.equitrust.com, in the upper right-hand corner, it has microsites with links to both of these as well. So really easy access to be able to view all that marketing material. Again, you don't have to have a login to view the marketing material. But once you do, then it's really easy to start the application, run illustrations, and complete the process there. So again, kind of ran through that quickly, but hopefully give you a few ideas. Was there any questions that you had about WealthMax? or if not, I didn't know how much time you have, Lewis, if you don't want to give you a quick flash of the website here, see where to go for some of those things.
Absolutely. Just one more pass on the questions. Anybody have any questions on the Wealth Max? Nope. All right, go for it.
Yeah, so I'll pull up so this is the agents.equitrust.com. Or can you see the website here, Lewis?
Yeah, it's a little small.
Okay. So on the right-hand side, you've got your microsites. So Bridge, excuse me. So we get great feedback on the website. I'll just kind of scroll through. These are some of the videos I was telling you about. It has different links where you can jump down to the bottom here, but shows you state approvals and rates. And then here's all the marketing material. So if you wanted to see the knockout questions, you might not be able to read this, but you can access this again without a login. So you've got the 5 knockout questions here. And then the coverage ratios that I was showing you, kind of some highlights are right here as well. But at the bottom, we've also got the illustrations, so you can kind of start playing with that. But once you're appointed, you just click Get Started Now, and then that's where you can go and build your clients and start running those illustrations. So also show you the Wealth Max, just real quick. Basically looks the same, but makes it really easy for you to navigate. Just kind of the quick videos, marketing material. So the agent guide here, and then you've got some of those questionnaires with the kind of knockout questions and face value factors here too. So yeah, I had a couple more slides that I'll probably just defer until next time in the effort to keep this within your guys' time constraints here, but definitely appreciate everybody stopping out and getting a quick overview of EquiTrust. We really think we've got some unique products with WealthMax and Bridge that can help you guys get off and running. But then that core portfolio too is something I highly encourage you to check out. We've got a lot of webinars coming up over the next several weeks for the general EquiTrust that we'll talk specifically more about those products if you wanted to get up to speed there. I'll show you, we do have some recorded webinars on our website under the education tab that you can get information about a lot of this too. So I'll kind of wrap it up here with there. Yeah, absolutely. Again, thank you so much, Lewis, and apologize for the technical difficulties at the beginning, but hopefully this was valuable for everybody still.
Absolutely. Thank you again. Once again, I appreciate you taking the time, Ryan, to introduce EquiTrust to our database. Before we wrap up this session here, does anyone have any questions one last time before we wrap this up really quickly? No. All right, so that's great. So thank you very much for joining today. I probably will be reaching out to you, everyone here, in the next 5 days or so, just to see if you have any questions, to go over EquiTrust, the annuity desk, and not sure if we can help any of the new guys here, but we definitely love the opportunity to speak to you guys really briefly. That's a wrap for today.
No,
Ryan,
I have
once
a
again.
question. Sorry, Louis.
Yes, Aaron.
So for the is there any other fees besides the riders for both annuities, the bridge and the Wealth Max?
Yeah, there are so the long-term care coverage fee, and then cost of insurance on Wealth Max and Bridge. We can take that offline. A lot of times it's easiest to look at it, or best to look at an illustration, because it's based on their age and underwriting classes upon issue.
Got it. Thank you.
Mm-hmm.
Once
If-
again, thank you very much for joining us. We apologize for the slight delay this morning. It was a little crazy getting started, but I'm glad we were able to get through. Thank you very much for joining, Ryan. Thank you very much. We'll be in touch soon with everyone. Ryan, I will be giving you a call later on today. Thank you, everyone.
Thank you.